Good morning and welcome to Morning Markets with True Potential. Today we'll be focusing on FOMC minutes which came out yesterday and also continued momentum in oil prices. All equity markets ended yesterday in the red. We saw US markets coming back from their holiday on Tuesday, 4th of July, Independence Day. The markets were in softer mood on the back of the FOMC minutes which were released yesterday, which showed that FOMC was indicating to further rise are still in case. We saw bond yields as a result also edging higher. 10-year US Treasury yields ending the day at 3.93%, their near-term highs. We also saw UK 10-year gilts also ending the day on much higher, ending there nearly 4.5%. So why was markets so worried about the FOMC minutes released yesterday? We know that FOMC, the Federal Reserve, left their interest rate unchanged in June, but there was increased talks about the resumption of those rate hiking cycle again in July and potentially in September. After the release, we saw the probability of July rate hike increase materially from their last week. Currently pricing around 90% chances that the Federal Reserve will raise by another 25 basis points. Their benchmark rates by another 25 basis points in July. We'll see how the markets digest that news today. But there was second news where also dominating markets. Chris touched upon this yesterday. The rise in oil prices that has continued yesterday as well. Again, building up from momentum from Tuesday after the announcement, the production cut announcement from Saudi Arabia and Russia. US traders were coming back into the markets, also providing some boost to the oil prices in general. Oil prices were also boosted by remarks from UAE, which indicated they are not intending to join this voluntarily production cut announced by Saudi Arabia and Russia. So that also played part in it, as did the API inventories drawdown were larger than expected. So there was some concerns that the rebuilding of reserves could also provide some short-term boost in oil prices. Though we saw this morning the weaker than expected Chinese services PMI, Chinese data continues to be disappointing. That has taken some of the profits out of the oil market this morning. And in general, we have seen some risk assets continue to come under pressure this morning after the data release. We believe that oil markets will, to maintain a sustained upward pressure in oil, we will have to see a continued demand coming out of China, which has been lackluster so far. This morning, also we saw the Shell coming out and announcing that the production cut announced by Saudi Arabia and Russia will have a material impact on oil prices. We'll see how it develops today, but it is quite a stark warning from one of the big oil giants out there. But as always, we'll keep you posted on how these developments come and also how these impact markets. But for now, we'll leave it there and thank you very much for watching Money Markets.